Hi everyone. So today I'm with Dom, and we will be covering MercadoLibre for Q1 of 2026. This is an earnings update video. Dom, whenever you're ready.
All right, let me know you can share or excuse me, when you can see my screen.
No problem. Yeah, we get. I can see it. It's good.
Wonderful. All right. I guess I'll just kind of jump right into it. Melee reported first quarter 26 earnings at $8.23 per share, which did miss the Zacks consensus estimate by 6.26% and declined 15.5% year over year. Revenues rose 49% on a year over year basis, 46% on a foreign exchange neutral basis to 8.5 billion, which did surpass Zacks consensus estimate by 4.85%. So missed on earnings, but did do better than expected on revenue. Total revenues are driven by continued strength across commerce and fintech segments, which grew 47% and 51% year over year to 4.87 billion and 3.98 billion, respectively. In the commerce segment, Brazil delivered foreign exchange neutral GMV growth of 30% year over year, accelerating meaningfully from prior quarters following the lowering of free shipping threshold in 2025. Mexico posted foreign exchange neutral GMV growth 20% year over year, while Argentina delivered 41% foreign exchange neutral growth year over year. Brazil's GMV growth has doubled from a high base in just 9 months, with unique buyer growth accelerating to 32% year over year, the fastest pace in 5 years. So overall, I would say quarter a bit mixed, but has promising results. Obviously, like we saw, missed on earnings per share, but did well on revenue. We can see that each different segment, Brazil, Mexico. I believe there was a third one I just read too. It's a third one.
Brazil, Mexico. There's Chile, the Argentina too.
Oh, that's what it was. Yeah. Uh, Argentina. All of them did pretty well. Pretty good growth year over year. Just earnings per share was a little bit under what they were expecting, but not too bad of a quarter, I'd say, for them. So that's about it for the earnings update. So we'll switch over to Matt and kind of look at their current financials and see how they're doing.
All right. Thanks, Dom. Appreciate it.
Yeah.
All right. So with that being said, the stock did sell off significantly, I would say. So Dom, you can see that.
Yep.
So it sold off today 12%. It's currently trading $1,632. You have a 52-week low of 1593, so it's certainly near that 52-week low mark. 52-week high of 2645. So you have to be a little bit careful with it because, of course, as we all know with stocks, it could always get lower, especially since they're trying to expand in their own markets like Brazil, like Dom was saying, Brazil, Argentina, and Mexico. So they're spending more money. That's why they're getting crushed on their profit margins. So Wall Street's a little bit worried about that. But they are growing at obviously a great rate. Now, we took a look at my DCF. My DCF is going to say it's undervalued by 40%, which is amazing. Historical growth, that was Wall Street. Historical growth is 74% undervalued. And this is, remember, 49%. I mean, they're growing out as 42%. So, yeah, I mean, it's not out of the realm of possibilities. They only have a market cap of like, I think after today sell off like 84 billion or something like that. So they could certainly grow at that significant rate. It's definitely in the realm of possibility here. Now, when we take a look at future growth, so right now we have that it's 10.84 billion. Next 3 years, it's going to be 12.13 billion. So it's going up slightly through investment and other things. That's why it's not a little bit better. Financial health of the company, this one's a little bit rough. The net to debt, the net debt to equity ratio is considered high. We do have a lot of rising debt. It's probably because of the capex that they have to put in. Keep in mind they are, as they're more famously known as like the Amazon of Latin America or South America, however you want to define it. So they have to put a lot of money into logistics. I mean, it's delivery trucks and fulfillment centers and drivers and all that type of thing, which costs a lot of money. So yeah, that has been increasing significantly, and plus now with the competition between all these Chinese companies and Amazon in their markets and Walmart. So yeah, you do have to be a little bit cautious of their spending there and their debt level. I do agree with that. So when we take a look at the net income is going to be fantastic. You have 482 million 2022. Now it is, we'll just round it up to 2 billion. 2026. So insane level of growth. Really, really great. So very good for them on that front. And lastly, tip ranks. So we're going to see that tip ranks is a strong buy, 13 buys, 3 holds, 45% upside. We have a low of 1,800 and an average of 2,300. So you do need to be careful because someone did downgrade it today. It was to a low of 2,000. Now it's 1,800. So because of profit margins, it's getting a little bit lower, and the stock could be revised more and more. Kind of what happened with AI because they have to spend more. Mercado Libre on this. It's still a great company. I do respect it. Just be careful of the spending. I would say just yeah, be a little bit cautious on that. Dom, is there anything else you would like to add to that?
I don't think there's really much else I can say that you haven't already covered.
Okay. All right, great. Thank you, Dom, and thank you, everyone.
Thank you.